I want you to read the tea leaves for us. Obviously, stable coins are supposed to be the safer bet for crypto investors. So, what does this mean for the average crypto investor? Should they be nervous right now?
So, I mean, nervous. The average crypto investor should be careful right now. Um, I wouldn't necessarily say nervous in the sense that is crypto going to go away. I don't believe so. I've been in this industry for more than 10 years at this point. I mean, I remember looking at my computer screen when the price of Bitcoin was $137, and to me that seemed very expensive. So this is one of the most resilient industries that I know, and developer teams are working night and day to build new products, ship new updates, keep kind of moving forward. And I think instances like this are good reminders of why it's important to have something like crypto, either to help disintermediate key players in the financial system or all the other different types of verticals that blockchain-based projects are going after. That said, we are going to be in for some choppy waters. For instance, I certainly know that although I think OKCoin, which is the U.S. affiliate of the global crypto exchange OKX, is the only entity right now that has announced that it's kind of suspending U.S. dollar deposits and withdrawals because of a loss of a banking partner. There could be other exchanges that follow suit in the coming days, weeks, or months if more banks decide to close accounts or or decide to just stop servicing the crypto ecosystem in general. There are hopes that some new crypto-specific banks might come online. There's two banks, Custodia and Kraken Bank, that have a special purpose banking charter from the Wyoming Department of Financial Services, but they haven't been able to launch yet. There are a few crypto banks that have gotten charters from the OCC, the Office of the Comptroller of the Currency, which regulates national banks, Anchorage Digital, and then also Pertigo and Paxos Trust. Although the last two are provisional, and we'll have to wait to see what happens there. But in the meantime, I think the biggest risk for investors is just if this if liquidity gets dried up, there's the potential for more slippages, for more liquidations, especially for offshore derivative exchanges that tend to be highly leveraged, and that could lead to even more volatility. Ironically, as we're taping this, most crypto assets are up on the day. Bitcoin's up about 10,000. Excuse me, Bitcoin's up about 10%. It's just shy of $25,000. Ether's up, I think about 5 to 7%. Most other major cryptos are up. On the stock side, some of the Bitcoin mining stocks like Marathon Digital and Riot Platforms are up in the 15 to 20% range on the day, which is kind of interesting given everything that happened. And I think it's mostly a reflection of some shorts getting squeezed in the market, but also a belief that with all this going on, there were fears that the Fed was going to raise rates another 50 basis points at its meeting this month. And now I get the sense that, and Goldman Sachs has even said this, that there's a growing possibility that rates are going to remain unchanged at the FOMC meeting this month, which would obviously be bullish for riskier assets, and crypto would certainly qualify.